I know that there's a lot of content out there about credit scores, but I really want us to take a look today at how it affects you as a home buyer and a home owner. You see, a low credit score is one of the main reasons that bond applications are declined. So let's explore why this happens and to make sure that you never find yourself in that position. I'm Sibulola Magwanyane, aka Sibulola the Estate Agent, and welcome to the channel where we make it that much easier for home buyers to get a home loan and small little nuggets for first-time home owners. Why don't you subscribe for regular updates on this kind of topic and click the notification bell so you don't miss out on videos every time they're loaded. Just so we get the basics out of the way, all of your financial habits relating to debt are recorded and measured. Now, on a monthly basis, your credit providers report your behavior to the 4 major credit bureaus in South Africa. Then the credit bureaus use this information to determine your credit score. Now, your credit score is a number that is given to you by the bureaus in order to summarize your credit report. Now, the numbers range from 0 to 999, with 0 being exceptionally poor and 999 being excellent. In order to attain a bond, ideally you want to aim for at least 610. So let's now take a look at how this number affects you when you are applying for a home loan. Say you've got a clothing account with Store A, and over the years, you've done a really bad job of paying them their money. Now, remember that every month, Store A is going to report your behavior to the bureaus, like I said, whether it's good or whether it's bad. So the bank can now see that you've got an inconsistent relationship with Store A. So the lender sees this and they're thinking, if this person cannot manage an account of 3,000 Rand over a period of 2 years, how are they going to manage a 900,000 Rand bond over 20 years? So now the bank is thinking, with this person, we're at risk of losing money. And the bank is not in the business of losing money. You might be thinking it's just 350 Rand, or it's just 1 month, it's just a clothing account. Every time you miss a payment, points are deducted from your score. And when you apply for your bond, the bank can now see your financial personality. And if your score is low enough, they will not grant you a loan. I speak about this quite extensively in my handbook called Don't Sign Yet, and you can download that in the description. Your credit score is a reflection of how likely you are to pay your bond installments and pay them on time. So the higher the score, the more likely it is that you won't default, and vice versa. A like would be really appreciated because it helps more people get this information because of the algorithms and video suggestions. And you can subscribe for regular updates on this type of topics. If you can secure a bond with a low credit score, you're very likely to be asked to come up with a deposit, be it 10% or 20%, depending on how high of a risk you are. So it works like this. If you have a bond of 1 million Rand and the bank asks for a 20% deposit, that means you pay 200,000 and the bank has only invested 800,000 in this property. Should you default on your payments, the bank is likely to recoup the 800,000 on a property worth 1 million Rand, because judging by your financial personality and your financial history, they're looking at it and thinking, there's a pretty good chance that this person is going to default. So if you have a good credit score, you're more likely to attract a favorable interest rate and might even be able to qualify for a 105% bond. That is basically where the lender is willing to borrow you money for your bond and transfer costs within the bond amount. I talk about this quite extensively in a video called All About Bond and Transfer Costs, as well as in a video called Buy a House with Zero Money Down. I'll add both links in the description. Regarding the credit score and the interest rate, under normal circumstances, if you put down a deposit, you're more likely to get a good interest rate because, like I said, the bank is less invested in the property. With a compulsory deposit, it's only being demanded because you already are a high risk. So you won't be able to enjoy the benefits, so to speak. I have recorded a video all about deposits. It's called The Benefit of Deposits, and I'll add the description in the link as well. So the power of an attractive credit score should never be taken for granted. It can honestly save you thousands over the term of the bond, because the slightest adjustment in the interest rate can have a gigantic impact on your bond repayments every month, and that will ultimately affect the amount of interest you pay for the term of the bond. We'll look at a practical example shortly. There's a couple of different ways that you can increase your credit score, and we'll look at that in a later video. But for now, I want us to look at the importance of having a high credit score at all times, whether or not you're applying for a bond. Here are 3 simple ways. One of the best ways to get and keep a high credit score is to pay your bills on time. Make sure that you pay at least the minimum amount due by on or before the date that the amount is due. Number 2 is don't overexpose yourself by using up all the debt you've got access to. So say you've got a credit card limit of 13,500 Rand. Don't use all of it, because you are then suggesting to the bank that you can't manage your finances, or that maybe you're living beyond your means. Number 3 is to avoid inquiring and even applying for credit on a regular basis. Again, this gives the impression to the lender that you are cash strapped and that you're under pressure, even if for you it feels like it's just a temporary thing. As you can see, these are not just quick fixes that you can pay attention to in a big hurry just before you apply for your bond. Start paying attention to your credit score months, if not years, before you put in your home loan application. As soon as the idea of buying a house crosses your mind, go and check your credit score and find out if there's anything you need to fix. It's always a good idea to check your credit report on a regular basis, even if you are not intending to take out a loan. I recommend checking your credit report directly from the bureaus. You don't always have to go through the bank. You are allowed access to 1 free check with TransUnion every year and 1 free check with Experian. So what you can do is register with both of them, and then once a year you get TransUnion. So I'll go TransUnion in January, and then I'll get access to Experian in July. So each of them give me 1 access a year, but then it's my benefit. I get access to 2 reports, 1 with TransUnion, 1 with Experian. This way you'll be able to spot any areas that need your attention, and you'll also be able to address any potential discrepancies that come up. Let's now look at the numbers and see how a high credit score affects your installments in comparison to a low credit score. So we've got 3 people buying at the same time in the same complex for the same amount of money, and let's say it's 1.3 million over a term of 20 years. So let's say person A has got an excellent credit score and he gets an interest rate of 10.5%. Then we've got person B, who is more average on his credit score, and he gets an interest rate of 11%. Then we've got person C, who is a high risk for the bank because he's got a low credit score, and he gets himself an interest rate of 11.5%. So person A's bond repayment will be 13,047 Rand. Person B has an interest rate of 13,487. You can already see a difference of 440 Rand here, hey? Person C has to pay 13,982. Now, the difference between person A with the excellent score and person C with the poor score is 885 Rand a month. Over the term of the loan, person A is going to pay 3,131,500 Rand. Person B pays 3,236,900 Rand. Then there's person C, our brother with the bad credits. He pays 3,343,800 Rand. The difference between excellent and poor is 212,000 Rand. See what a big difference that makes. All because person A managed his credit well months, if not years, before purchasing his property. I hope that this encourages you to keep positive credit habits so that when you're ready to purchase your property, you'll be in a good position to get an excellent interest rate. If you already have a good credit score, you might be in a position to qualify for a bond where your transfer costs are included. Check out this video all about 105% bonds.